As a mother, wife, and divorce attorney for over 15 years, experience has taught me a lot about how to deal with times of uncertainty, transition, and facing opportunities for growth. I'm happy you're joining me for this part of the journey. Do you ever feel like we're living in one disaster after another? From ice storms to hail to tornadoes. How do you protect what you've worked so hard to create? My guest here today is Jennifer Wilcox. Jennifer is an agent with State Farm for over 18 years, and she has firsthand experience in helping people prepare for disasters. She's also the mom to 3 busy children, and she and her husband are active in our North Texas community. She's here today to share some of her tips and insight, what she's learned to help people prepare for protecting what matters most during times of transition. And of course, I'm going to mention that she's here today speaking on behalf of herself and not on behalf of State Farm. Jennifer, thank you so much for taking time to be here.
Thanks for having me.
So when we talk about insurance, there are like 3 main areas that kind of come to my mind that I want to touch on with you today. And the first one is homeowners insurance. And, I'm a lawyer. I'm used to reading like complex documents, but I will tell you, it is overwhelming to pull out the homeowner's policy and try to decipher that. What are some of the most important elements we need to look for in a homeowner's policy?
In Texas, there's 2 main types of homeowners policies here. There's an all-risk policy and there's a named peril policy. Some companies offer both. Some companies offer one type and some offer only the other. So the difference between the 2, an all-risk policy says that everything is covered unless we specifically exclude it. A named peril policy lists the covered items. Only those risks are covered.
So the first thing that's important to know is whether you have an all risk or
Yes.
a named peril policy.
Yes, not all policies are created equal.
And where do we look to see that information?
You can ask your insurance company whether you have an all risk or a named peril policy. There is also a website, the Office of Public Insurance Counsel website should be able to tell you which policy you have. But the easiest place would be to call your agent or to call the insurance company.
Is it like in the actual policy packet itself? Is it like in the title, or would you just see writers, or like how do they look different?
I don't know exactly how they look different because I'm not real familiar with other companies' policies.
I see.
I'm comfortable looking at declarations pages, which lists coverages of a specific policy, but the policy itself, I'm not privy to. I don't have access to that.
So what is the most common type of policy for homeowners to have?
The most common type that's sold in Texas is the named peril policy.
Is there a difference in cost as well?
A difference in cost, of course. So with a all peril policy where you have more coverage, it's going to cost more. That is the type of policy that State Farm offers that I sell. The named peril policy is a more common policy. It's cost less because less risks are covered.
Okay. And of course, the time to find out that you have less coverage
Before a loss.
is before a loss. And
Yeah.
unfortunately, I think for most people, it's a big surprise to find out that they're not fully covered
Right.
in incidents.
Yes.
Okay. What is the deductible? How does that work?
Well, a deductible is what the customer is responsible for paying before the insurance company pays. So in the event that you have a covered loss, let's say, for example, you have a theft and you start adding up how much has been stolen from your home. If the amount that it would cost to replace the item stolen from your home is under your deductible, then we would not recommend filing a claim. That's the customer's responsibility. So it's what the deductible is what the customer pays out before the insurance policy kicks in. In Texas, the most common deductible is 1% of the amount that your home is insured for. So if I'm insuring your home for $500,000, then your deductible is $5,000. There are 2 deductibles in a homeowner's policy. One is other perils. That would be fire, theft, water, and then there's a wind and hail deductible. That's big in Dallas.
So I'm guessing that in Texas, we probably pay a little bit more for that. I mean, the deductible is a little bit higher for the wind and
You can choose your
hail.
deductible. Most companies, the minimum deductible for both wind and hail and other peril is 1% of the amount that your home is insured for.
Okay.
You can choose a higher deductible, 2%, 3%, 4%, and on. Most people don't do that unless they are comfortable assuming more of the responsibility upon a loss.
And of course, I assume that the higher the deductible, maybe the less expensive the policy is.
That's exactly how it works.
Okay.
If you were to do the math, there's not a huge savings between a 1% and a 2% deductible, and the customer's out of pocket double the money. So most people have the 1% deductible.
Okay, I see. That makes sense.
It makes the most mathematical sense.
Now, when the hailstorms blow through and the wind and all of that, I know in my neighborhood, I'll drive around and you'll see all these roofers will be out getting business. And I've heard sometimes some of the roofers want to offer that they'll pay the deductible. Is that allowed? Is that permissible?
It's actually illegal and unethical.
Okay.
Both.
So, I mean, I think a lot of people don't know that. You think, oh, this is great. The roofers come by and they've said, they said they're going to pay the deductible, so we're not going to be out any money. But what you don't know is that then you're dealing with an unscrupulous roofer.
That's right.
Okay. The other thing I would talk about is like the value of the house, like how much coverage do I have? So, we bought our first house. We lived in it for 20 years. The value changed substantially over time. When is a good time to kind of reevaluate or reassess how much coverage you have?
Okay. First is when initially buying a homeowner's policy with State Farm and with my office. What happens is we ask you questions about your home. We also look on the internet for details about the house through Dallas Central Appraisal District website. We can look at Google Maps to look at a photo of your home. And we take all that information, put it into a calculator, and the calculator tells us how much it would cost us to rebuild your home.
Okay, so it's rebuilding the house.
It's replacement cost.
Okay.
We are not concerned with market value. We're not concerned with appraisal value because those values take into account the cost of the land. We don't have to insure the value of your land. So we are concerned with rebuilding your home, the structure itself. So that's the first time that you look at how much do I insure my home for is when you buy a homeowner's policy. With State Farm, we have an inflation guard on our homeowners policies to keep up with the rising cost of construction and labor.
I was just going to ask about that because right now I know like the costs are going through the roof. So
yes,
that's not, if you have a good policy that's covering that, then
you want to make sure you have an inflation guard for sure. So I always tell everyone, my grandmother bought her home for $12,000, and when she passed away 60 years later, certainly the home was insured for significantly more than $12,000 because she had a good homeowner's policy that kept up with the rising cost of inflation. That's without the inflation guard, I would say that you'd want to look at having your homeowner's policy reviewed every 2 or 3 years.
Okay.
And even with the inflation guard, if you do a remodel or an addition or any kind of construction changes to your home, your insurance company needs to know about it so they can reflect that in the insurance coverage.
So that makes sense. Obviously, you do a big remodel. That's going to be more expensive to rebuild that out if something happens to the house.
Exactly.
What are the most common types of damage that happen to your clients? I mean, what do you see and experience the most?
In Dallas, of course, we see a lot of hailstorms. Other than that, I'd love to talk about water coverage and how it's covered under a homeowner's policy because we do see water claims. And many people, I don't think, are informed about how water is covered under a homeowner's policy.
This is great because I'm really curious. I've known people who, they have a water leak and they get a whole new kitchen or a whole new bathroom. And then other types, it seems like there's no coverage. So how does that break down? What are some of the things to look for?
Yes. So I'll speak about the State Farm policy because that's what I can do. Under the State Farm policy, there is coverage for sudden and accidental water. That is automatically included in your homeowners policy. You don't have to pay extra for that.
So is that like if it's the floods, it's raining outside and it's pouring in? I mean, what is
No.
sudden and accidental
Sudden
water?
and accidental water is a pipe burst or a washing machine hose coming loose and water going everywhere, sudden and accidentally. What you can purchase with State Farm and some other companies, not all companies offer a rider for slow water leaks, but we do, and we always recommend it. This provides coverage for damage that's caused from a plumbing pipe leak or an appliance leak that happens over time, you're not aware of, it's behind your wall, it's under your floors, and then you realize you have a very big problem.
Like you get a big water bill maybe or something?
That's one indication of, oh, I think I have a problem. A lot of times people will notice their tile shifting or cracks in cabinets or other things, putty walls are a sign to call us. But you mentioned flooding.
Mm-hmm.
That is excluded from every homeowner's policy in Texas. You cannot buy a homeowner's policy that gives you coverage for outside rainwater coming in. That coverage is flood insurance. It's offered through the National Flood Insurance Program.
Okay, so you have to go through a whole different program to get that.
You can buy it through us, and most insurance agents will sell it, but it is not company sponsored. It's government run.
Okay. That is really interesting.
Mm-hmm.
I had no idea. Okay, so I was thinking, well, we'll shift now and we'll talk a little bit about cars.
Mm-hmm.
I'm the mother of 3 teenagers, and car insurance is something that is definitely on our radar. So what are some of the basic things we need to know, first of all, about car insurance?
The most important part of car insurance is your liability coverage. I will say this day in and day out, and I don't think that everyone is aware of that. So your liability coverage is the coverage on your declarations page when it says 50, 150. You've heard that. Mm-hmm. What that means, if those are your numbers on your declarations page, what that means is if you cause an accident and someone is injured in the other vehicle, then your insurance company can pay up to $50,000 per person for injuries, a total of $100,000 for all injuries, and a maximum of up to $50,000 to repair the property that you've hit, whether it's their car or a building or whatever you've done. You want to make sure that your assets are protected with that first number, that first $50,000, because if you cause an accident where someone in the other vehicle is killed, your insurance company will pay that first number, $50,000. If you have assets worth more than that, you are vulnerable for a lawsuit, for having to pay out of pocket. So what I recommend to anyone who has anything to protect, purchase a personal liability umbrella policy. You've heard of those?
Yes.
Umbrella policies? Okay. Anyone who has any money to protect, buy one today. It's a $1 million additional liability coverage on top of your car insurance and your home insurance. So if there's a loss, your home or auto insurance pays first. And if the damages exceed that liability coverage that's listed on the home and auto insurance policy, then the umbrella policy pays.
Okay.
It's in $1 million increments. So if you need more, you buy $2 million. If you need more than that, you buy $3 million.
So for anybody who has, assets more, and I mean, Texas we say it's a generous state to be, you have there is a lot of credit protection just in terms of like your homestead protection.
Yes.
But once you get beyond that, then it's fair game. So if you own a vacation home, you own other properties, there are investments that may not be protected, and that could all be up for grabs in a lawsuit.
That's right. In an umbrella policy, in order to purchase an umbrella policy, your auto insurance policy must read $250,000 per person, $500,000 for all injuries, $100,000 for the property damage. So you have to have those underlying limits first, and then you can purchase the umbrella policy.
Okay.
Umbrella policies are very affordable. They range from $12 to maybe $50 a month. It just depends on your drivers.
Oh my gosh.
If you have youthful drivers, and or if you have accidents. that will increase the cost of your umbrella policy. Depends on the number of vehicles you have. Your agent can tell you how much it costs, but it's the most important part of auto insurance coverage.
Very insightful. I'm so
Mhm.
glad we're having this conversation. Okay, the other question I have about auto policies is the car insured or is it the driver? So, for example, if I have my teenage driver ends up driving his friend's car, is he going to be protected?
His friend's insurance would need to pay.
Okay.
The insurance follows the vehicle. If your son had permission to drive the car under State Farm, we would pay for that claim. Not all companies will do that. Some companies will only pay if it's a listed driver on the policy. So I would be cautious about that and know if that's your plan, and know that you can't allow someone else to drive your car because it could be excluded.
Okay, that is really interesting. And I know we see that come up quite a bit, especially with families that, like when they're getting remarried and you have lots of kids joining under one household. And, you needing to make sure that everybody's listed on the policies for driving the cars.
Right.
And also needing to make sure that whoever my teenager, that they're not inviting others to drive our automobiles.
Yes, it's safest if we all just drive our own vehicles.
So what are some of the factors that we look for that will help determine the cost of the insurance? Like just kind of the basics on the policy, and then we'll go back to talking about teen drivers.
Okay, sure. The things we can control with auto insurance rates are coverage and discounts. Those are the things that make up your premium. So there's liability coverage, which we discussed. There's personal injury protection, which pays if you're injured in an accident. I usually recommend covering your healthcare deductible with that personal injury protection number. $2,500, $5,000, and $10,000 are the options. Then comprehensive and collision, which is what makes up full coverage. Comprehensive is theft or hail damage or flood is covered under comprehensive. And then collision is if you have an accident and your car is damaged. Those are the two most expensive coverages in an auto policy is collision.
Okay. So liability is making sure that the other people are protected, so you're not going to have a lawsuit. But you also want to make sure that, if you're hit by an uninsured driver or they don't have proper coverage, what are you looking at to make sure that you're adequately covered?
Good. There's two ways to cover yourself for uninsured motorist or an uninsured driver hitting you. You can purchase uninsured motorist coverage and protect yourself that way. That coverage lists bodily injury to you and the people in your car, just like the liability covers the other folks. So if, let's say you have an uninsured motorist of the 150, again, I'll come back to that. It's a common number. And you're hit by somebody who doesn't have insurance or they don't have enough insurance. We can pay for your medical injuries, $50,000 per person in your car, $100,000 for all injuries in your vehicle, and then up to $50,000 to repair your car with a $250 deductible. So that's one way of protecting yourself if you're hit by an uninsured motorist. If you did not have that coverage, you could carry collision coverage on your policy. And if you were hit by somebody who didn't have insurance, your collision coverage could fix your car after usually a higher deductible. Most people carry $500 deductibles under collision. Some people carry $1,000, just depends on their comfort level.
Got it. Okay, there's so much in this. That's why it's really helpful to have a great agent to help navigate through all the options.
For sure.
What are some of the discounts? So, if my kid's getting really good grades, can I expect that we'll be paying a lower premium for them?
Yes. So youthful discounts are critical when customizing their plan because it is expensive to insure a youthful driver because they hit things.
Yes.
So discounts for youthful drivers would be academic achievement discounts, so good grades, usually 3.0 or better. There's also driver's training. So they take a driver's training course, either a parent-led course or a commercial course, gives the discount. State Farm offers a State Farm specific discount called Steer Clear, and it's a wonderful discount for youthful drivers. It's just layering those discounts, adding as many together as we can. to try to get the price as low as possible.
That
The other way to mitigate a youthful driver premium is that collision coverage is very expensive. So if you can have your youthful driver in a car that does not need collision coverage, that's another way to mitigate the coverage.
so let them drive
cost.
the beaters. Is that?
It's an option.
It's an option.
Now, don't show this to the youth. They won't like hearing
Right.
that, but it is an option, and it's every family gets to make their own choice on what's comfortable for them, but it is something they can do.
That's great.
Mm-hmm.
Now, when people are going through a transition like a divorce, obviously that's a time to pick up the phone and call your agent and talk about what your needs are going to be going forward. What
Right.
advice do you have for people who are, when it comes to auto coverage when we're getting a divorce?
When we will split an auto insurance policy after a divorce, we like to talk with the husband to help him customize his plan based on the new situation, as well as the wife. And we start from scratch because now their situation is different, their finances are different, how they need to protect themselves are different. For example, maybe they need to add rental car coverage to their plan, whereas before, if they could manage with one car and borrowing cars, and if that's not an option anymore, then they need to have rental car coverage. There's just this big conversation that we will encourage folks to have with us to make sure that their plan is right for their current situation.
Good. And especially, in terms of who's going to be responsible for the children.
That's it. That's
Yes.
a big one. And
So if the children don't have their own car, and you're each going to put them on a policy if they're driving your car, is that what I'm hearing? Is it necessary to make sure that the kids are on?
no, I would not recommend that.
Okay.
If you don't want to pay double. So if the husband chooses to cover the cost of the youthful driver on his plan, if they're driving mom's car and there's an accident, it is okay. State Farm would cover that.
Okay.
Not all companies would, so you'd want to talk to your company to make sure that if it's a listed driver policy, then yes, you would need to have both. The youthful driver listed on both.
That's an important conversation to have,
it is.
for sure.
It is.
The next thing in the area of insurance I wanted to just touch on was life insurance.
Okay. My favorite.
And this is another one where I think it can be really confusing. So I know there are expensive insurance policies, life insurance policies, and then there are much more affordable life insurance policies. Can you kind of help us understand the main difference?
Of course. So really there's two types of life insurance policies. There's term insurance, which is a temporary policy. It's good for a specific period of time. Usually it's 10 years, 20 years, or 30 years. So you buy a policy to cover your temporary needs sometimes you only need coverage for 10 years. Sometimes you need coverage for 30 years. You buy the plan that fits that goal. And then of course there's whole life insurance, which is a permanent plan. It's designed to last your entire life. The State Farm whole life insurance policies go to age 121, so you can't outlive them. And that plan covers permanent goals. So I don't think there's one set way to do life insurance. It's a real personal plan, and we just talk about how much coverage do you need, and we have a conversation for that. How long do you want it, and how much do you want to pay?
And I think I know in my own life, the needs or the desires sort of evolve. So when you bring that new baby home, you want to make sure you have enough coverage in place to cover them. But maybe you're young, and so you want to get the most affordable policy.
Yes.
But that term policy expires. So I know my
Right.
oldest is 21 now. That 20-year policy that we got,
Yeah, it's
and
coming to an end.
it's at an end,
and it did its job.
It did its job.
Mhm.
But it's not so inexpensive anymore at this stage in life to get another term policy, right? So
Right.
so how do the costs of the policy, how are they impacted by different variables?
Well, certainly age is the main factor when determining a life insurance cost, but also health. And so you can't buy a life insurance policy after you're not healthy any longer. So we always recommend buy your life insurance, buy as much as you can afford, as soon as you can, for as long as you can. Because we never know what tomorrow brings, and you might still be around, but just not in the best medical condition to get those preferred pricing.
Right.
So.
And so what are some points in people's lives that you see when they are most interested in life insurance or make good sense?
Yes, buying a home is always a reason, because you've accepted a loan that you've both agreed to, that usually will depend a lot of times nowadays on both incomes. And so you want to make sure that you, if something happens to one of the spouses, do we need to cover the mortgage? Do we need to pay off the mortgage so the other spouse can live comfortably in the home without having to worry about it or make a quick sale or something like that? So buying a home, having children is always an additional responsibility financially. So we want to make sure that we can cover potentially their education cost if you die before they go to college, and you want to have that covered. And income replacement. So getting married is a reason. If you are now making decisions based on two incomes, if one of them is not here tomorrow, what happens? So we just talk through goals, and everybody's different. Everybody has a different plan. I personally have all three types of insurance. I have term insurance to cover my temporary needs, like my mortgage, my my children's college education plans. I have a return of premium term, which I didn't talk about, which is really a fun policy. It's a temporary policy that at the end of the plan, you get all your premiums back.
Wow.
Some people love that. It costs more, but it's like a forced savings account. And so at the end of the 20 years, you didn't die. That's really good. You get all your premium back, and you can pay off your home with it. You can pay for your children's college education with that money. You can do whatever you want to with it. So I have one of those to satisfy one of my goals. And then I have permanent insurance, because I want to make sure that whenever I die, whether it's at age 50 or at age 90, I have a legacy for my family. And I'm doing that with life insurance. So in my retirement years, hopefully I live to age 90, but in my retirement years, I can spend all my retirement income on me. I don't have to feel like I have to put some aside for my children, because my permanent life insurance plan is going to do that for me.
That makes so much sense.
Thank you.
I was sitting here thinking about there's so many ways to buy insurance these days. Mm-hmm. So I know I get bombarded with offers all the time. And one of the benefits of State Farm is that you're working with an actual agent. And I know from knowing you, the kind of service and engagement that you have with your clients. Mm-hmm. Talk a little bit about kind of what you get to experience working as an agent with people through what I imagine are some of the most difficult times.
And best times. We're there for the best and worst times of everyone's life, it feels like. So we get to rejoice when our customers get married or buy their first home or have their first baby. These are all really fun things that we get to go and customize their insurance plans to protect. And then we do also the very hard stuff. I've had 3 home fires this year. Those are traumatic, but it's so important to have someone that you trust that you can call when this happens to you. I would just encourage your viewers, your friends, your family to think about, who do I want to call when something really bad happens? Car accidents can be very traumatic and change people's lives forever. Who do you want on your side, giving you advice, walking you through the process? I know me and my office provide huge value to our customers whenever we're helping someone through a tragedy.
I guess the difference of, do you want to call an 800 number and luck of the draw versus really having somebody on your side to help you navigate that period of time.
Right.
Thank you so much for coming and helping illuminate and educate us on insurance. This has been very insightful.
Thank you so much. I enjoyed it.
If you want to learn more about Jennifer Wilcox, we will include a link so you can find out how to contact her. And we'll also include a link to the flood insurance program that she referred to in our talk today. We hope you'll tune in next time. Thank you.